Hello traders, continuing our ACB Masterclass on mastering 12 months of ACB templates. Now just a brief sort of, as we continue this study, I want to go over a couple of things with traders. I received some questions along the way and I want to reinforce some simple understandings, especially with my sons. My son's job is to come to the screen and look for the Wednesday close and breakout, high close of month or week, low close of month or week. And some months are going to be trending or they're going to explode on days other than a Wednesday from major red news. And they're going to struggle to potentially find their textbook ACB template, forcing my sons to sit on their hands and do nothing. They can comb through instruments and we can have a new month beginning, and we're going to see some great opportunities in other sessions for traders, but on the Wednesday we're not going to see the ACB textbook perfectly template. And this is a good example of February, where I talk about major red news, the cycle of the month beginning, non-farm payrolls, and we see CPI complete wiping out the entire week. Now obviously we have a news catalyst opportunity for traders on the Tuesday on week 2, and then the cycle begins again. And in week 3, we have FOMC taking out the high close and high of the month for that current month. As we get towards the end of that month, we see a first red day at the extreme of the month, the high close of the month, coiling into the beginning of the new month. And we see that again on the front side of the new month, that Tuesday, completing that pattern on the back side of our pump and dump template. Now, the reason why I want to go over this is that I want to reinforce to traders my son's jobs. The job that they're tasked with is to make the best trades. Money is a byproduct of a money-making trading setup. Now, some of the questions I'm receiving exemplify the degenerate gambler mentality of a trader going to the screen every single day trying to manufacture in their own mind a trade, which comes back to the question of, are you trying to trade markets or are you hunting out an edge? Now, my son's edge is Wednesday close and breakout, high close of month or week, low close of month or week, coil sideways for the timing window, and here's what their job is to do. Execute the trade. Take an entry, place a stop loss, take profits, and walk away, or preset the profit target, walk away, or hold to a close. Now, anything outside of that is traders' own mental verbal diarrhea and baggage. You don't learn anything else by clustering it with other things and variables and optimizing and everything else. You either have your edge, present, and as my friend Steven says, react. Entry, stop loss, take profit level where you're going to hold to a close or preset your level and walk away. There is nothing else to do other than to move your position to break even when a level is broken. That is their only job. No thinking allowed. If you're thinking, that means you're looking for a trade. Everything else is mental clutter and mental baggage. This is exactly what I've told them. Take your entry, place your stop, place your take profit or move to break even level, walk away and hold till close. Now there's only two things that traders can control. So as I mentioned, their job is to rinse and repeat that Wednesday close setup on the Thursday. That's it. That's their edge. Nothing else. You can only control two things: how much you lose and how much you win. Anything else that you believe is something that you have to sort out, because those are the only two things you can control in an uncontrollable environment. You, yourself. So whatever the market does is beyond your control. And I only want them to execute on ACB setups where it is almost impossible for them to screw it up or lose. Entry, stop loss, take profit, walk away. That is it. That is the only thing they need to think about and do. Anything else outside of that is forbidden. Now, if the Wednesday CIB, high close of month week, low close of month week, sideways coil, does not show up for them on any instruments, they aren't supposed to try and figure out where they can get a trade. Outside of that, that's called gambling. That is not their job. There'll be some people watching this and listening to this that don't like that. They don't like that attitude. They don't like that perception. They want to find trades every day. And there's nothing wrong with that if your skill set and your edge present. But outside of that, if you're looking for trades, be very, very careful, because that's what can lead traders to inconsistent results and also circumstances and market conditions on the wrong days where they can do damage to their account and to their psychological capital. So you need to make sure whenever you press the button that you have a 90-10 edge in the market. Anything less than that is in 50-50 category. You either have your edge present, and the coil is designed to make it dummy proof. The coil is designed to make it dummy proof. Again, this is their job right here. That's all they need to do. There is nothing else to do in trading. Entry, stop loss, take profit, and walk away. So you either have a preset profit target level or a hold till close, and after that, it's walk away. Regardless of the type of trade, whether it's a nail and bail, whether it's a hold till close, those are the only 4 conditions that need to be met. Remembering, you can only control 2 things in any trade. You can only control 2 things in any trade: how much you lose and how much you win. Most important thing is sticking to the process. We come to March, we have a market that has closed in breakout on gold. Our daily time frame, again, market in breakout. It's coiled sideways, and on Wednesday, week 3, we've closed as the highest closing price of the month in breakout, coming up on our watch list. The 4-hour chart shows that the previous week was an inside week, and we've broken that low of week right at the beginning of our new week, made lower lows before exploding and closing in breakout as the highest closing price of the month. Now, to repeat, the 4-hour chart gives us a perspective on rotation of time at the extremes when we have a setup. Not trying to get in because the 4-hour rotation is happening. The most important and only thing that matters is that we have a setup. And then the realization of, as we are entering into our coil, if indeed it presents, that we have time now behind us with that coil, all time frames aligning. Not trying to get in because time is rotating. We need to get in because now we have all time frames aligning in our coil, in our setup. That also gives us a perspective on managing our risk when we're at the extreme. And when we go down to our 1-hour time frame, we have a market that has now broken out even higher above the previous month's level as well as the current high of month, and coiling sideways on our hourly time frame. And the reason I emphasize this is to repeat to traders, that is our maximum stop loss that we could incur on any of those 2 time frames, the hourly or 4-hour. And often, sometimes they'll be very similar. But that gives us a perspective on managing our maximum stop loss. When we have our setup, that is our worst case scenario, the higher time frame extreme. The smaller time frame gives us an opportunity to scale into a winning trade setup, an ACB template, to tighten our risk parameters, and as our experience and our skill set dictate and our results dictate, being able to scale into these opportunities. Close and breakout, breaking higher, coiling sideways, not trying to pick the extremes, not trying to catch the higher, catch the low, coiling sideways after breaking out again. Now, in this particular 5-minute chart, the purpose of identifying this is to build your muscle memory. Pump, coil, dump. an ACB template at the extreme after closing in breakout on our Wednesday as the highest close of the month or week or lowest close of the month or week, how does it present into our timing window? The simple criteria, again, there is no thinking. So when traders ask, well, what is your thought process? There is no thought process. This is the thought process. Entry, stop loss, take profit level, or hold till close. That is the thought process. If there's any other thinking, then that's a problem, because thinking is what causes inconsistencies, analysis paralysis, verbal diarrhea, all those things. There is no thinking. You either have an ACB template and a coil setup into your timing window, or you're trying to manufacture a trade. The purpose of the ACB templates, as I said, is I want my sons to only enter into the market when it's almost impossible for them to lose. There's zero management. If they place a profit target in place, it is just a 100 or 200% expansion of a range, a high-low range. That's it. Otherwise, hold till close. Or if the market starts to bounce through levels, adjust a level down to exit the market if it reverses. That's it. Or just take the profits. Lock in the money and walk away. Entry, stop loss, take profit, or hold till close. That is the thought process. Anything outside of that is not allowed. That is all they are supposed to do. There is no thinking allowed. The way I dummy proofed it is that they have to have the EMA coil. Those EMAs represent the higher time frames. There's no magical formula to them. I know traders have asked about changing them and doing everything else. Simplicity, reproducibility, scalability, rinse and repeat. That is the whole model. There is no need to optimize. There's no need to add other variables into the equation. Sticking to the plan is what will allow them to continue to grow their trading business over time. And in between, if their setup does not present, their job is to do nothing. Come back the following week and find an instrument that is closed in breakout on Wednesday as the highest or lowest closing price of the month or week in breakout. Does it continue to break out and coil and set up into the timing window? If it does, enter, place a stop, place a take profit level, or a hold till close decision. One or the other. That's it. That is all they are supposed to do. Nothing else. Zero thinking allowed. And when we get these markets coiling, as your experience and your results dictate, understanding to be able to scale in, and when I say scale in, adding additional positions, still managing my risk, when it breaks a level, moving to break even, and walking away. That's it. There's nothing else to do. There's nothing else a trader can do except mess up a winning trade. Now, as we get into our second level and we auction back and forth, a market pulling back and moving lower presents a level for traders to either lock in profits or move their trailing stop towards. That's it. That's the only thing allowed. Otherwise, hold till close, except that you could have gotten more out of a winner or taking some off at a level and holding the rest till close. Whatever that decision is, make it before the trade is taken and walk away. That's it. That's all a trader needs to do. Entry, stop loss, take profit levels. And next we have a chart of silver, and this is an excellent opportunity to go through a market that has given us multiple signals and then looking at how that sets up into the session on a Thursday. So we have a market that closes in breakout at the beginning of the month and closes on a Wednesday as the high close of a month, on the beginning of a breakout of a new high of month level. And most importantly, how does price behave on the day? We go to our 4-hour chart and we can see a market that is broken out, closed at the extreme and coiled sideways and continuing to trade higher. So understanding the difference between a market that closes in breakout, setting up for a reversal, and a market that continues to trade higher. Now notice our extreme candle. We have a market that is trading sideways inside of that candle, not breaking out again until later in our London US window, breaking higher. And so there is no setup. We'll go to the smaller time frame to look at this on our US session window. Now, this market on Wednesday has closed inside of the previous day's range, but most importantly, this is not the reversal setup. Now, this is not the trend setup either. We want a market closing in breakout and coiling back into that explosive move, whether it's a trend trade or reversal trade opportunity. Now, we've gone over trend trade opportunities. We'll do that again, but most importantly, I don't want my sons taking these trades. I don't want my sons taking these trades. Now, the purpose of the ACB is that it's not coming back. And in this particular case, this market has closed in breakout the following day. But we still run the risk of this market breaking out and reversing into them. And that is not the ACB template. And I'll show you what a trend trade template looks like. If we go back and look at a perfect textbook trend trade market that closed in breakout on a Wednesday as the high close of the month, projecting that high of day level across, high month level from the previous day, but a market that closed in breakout. This market closed in breakout, whereas the silver chart, it closed within a previous day's range, but it was the highest close of the month after breaking out of a monthly level. But I'm painting the picture of building your muscle memory on textbook perfect charts. So I repeat, my son's job is to execute money-making trade setups, entry, stop loss, take profit levels, or hold till close. Now, differentiating this chart that closed in breakout, the highest closing price of the month on a Thursday and the high of the month, coiling sideways on top of the breakout into our New York Open, and differentiating that from our silver chart. I want to reinforce to traders who want to take trades to break that mentality. Now, in this particular case, you could have taken a trade, but it's not the same opportunity as an explosive parabolic coil, an ACB coil. This is a market that is still in breakout. It can auction back and forth, and the ACB templates are the ones that are scalable in size. This is a trend continuation trade, differentiating the two. A market that closed in breakout on the silver chart, coiling sideways, and we had a higher time frame coil on our silver daily chart to the left, where we were continuing in that particular situation back through a previous month's range. This is a no setup chart. Now, worst case scenario, if somebody takes this trade or my sons take this trade, the problem that it potentially could have been stopped at a break even once that level was broken, and most importantly, understanding closing through a level, not just pinning through a level, closing through a level. Now, they may have potentially been stopped out or not and held till close. Once the level closed above that high of day level, if traders had taken this, then they must go to break even. This particular close, they could have done the same and they may have been stopped out at break even, but I want to paint the picture again of what a perfect ACB coil looks like. Master the setups. Stick to textbook perfect opportunities where it's almost impossible for you to lose. So understand the difference again. This market closed in breakout, coiled on top of the breakout high of day level into the New York Open with all EMAs aligned for an explosive ACB range expansion trend trade opportunity, and going back and recognizing the difference between these two templates. So no setup on this particular day. Now, we had another signal the following Wednesday, a market closing in breakout on the 13th on a Wednesday as the highest closing level, highest closing price level at the high of our month in breakout. How does price behave? Right away in the first 4 hours, we break out again and engulf on our second 4-hour candle. And again, a market that pulls back into closing price, coiling sideways into our US session window. So we've broken above, broken below, and coiled sideways at closing price, the highest closing price of the month. We get to our Thursday window, we have our high close of the month, Wednesday close and breakout. It comes up on our watch list. The market breaks out again before collapsing in our Asia window and then pumping back up to closing price. Now this is a market, again, differentiating a market that breaks out and coils sideways, high of the month, high of the week level, coiling sideways for the dump back down. We have a market that's come down and put in a low of day level, a peak formation low and a peak formation high. Now, traders may misconstrue this as a lower low on the inside. Now, we have not broken any daily levels. We have a box, and this is where traders need to recognize and build their muscle memory, similar to what we saw in the previous break, close, and breakout, what a well-engineered coil looks like. We have a large range here in a market that is coiling into closing price, but now potentially trading into our low of day level. This is a no-go zone. Again, I will repeat. We want to see the market break out and coil sideways for the parabolic collapse. Go back and look at the perfectly engineered templates for the ACB. This market breaks out and pulls back inside, putting a higher low of day in place before coiling sideways. Now we'll go down to a smaller time frame, and I want to repeat that my goal is not to take trades. My goal is not for my sons to take trades. My goal is for my sons to execute ACB templates. Now, if by chance my sons take this trade and they get into the market at some point, so recognizing where's our coil, we don't really get a coil until over here, where we're inside of our at least three EMAs. Up here, we're sideways on top of the EMAs and coiling over here. So if we take a trade here, and we've stuck around until the 10 a.m. 4-hour candle to start, we take a trade, the same process applies. We can take our trade, we can put our coil in place, we can put our stop, and I'm talking about a well-executed trade on a poor setup. We have an entry, a stop loss, a level to go to break even at, and if you walk away, exiting at the close. Now, in this particular case, trader would have come out with a small degree of profit, but I want you to recognize the difference between a market that has a nice tight coil sideways for an explosive parabolic collapse. We've printed off a lot of charts with perfectly engineered templates, but it's important regardless, there is zero thinking, zero emotion, zero stress, other than the fact that this market took a little bit longer. It's not a well-engineered template. It's a poor quality setup. But in that process, though, entry, stop loss, break even, you can put a measured profit target in place, high, low, 100% expansion in this particular case, large box, 100% expansion, or hold till close. Now this is not an ACB best template setup. And the reason I'm showing this is that if you get into charts like this, go back and build your muscle memory on what a tight coil looks like, and we'll be looking at one of those in a moment. As we follow our chart across into our third week, we have another explosive close-in breakout on a Wednesday at the high of the month. Now, at this point, traders are probably who've been trying to short silver and saying, well, this doesn't work. I had the high close of the month. It didn't work, and it didn't stop out. I'm going to repeat. Build your muscle memory on a well-engineered ACB template. Just because a market breaks out and closes in breakout at the high close of the week or month, low close of the week or month, does not mean that it's going to be a well-engineered ACB template. What that does do is it brings it up on your watch list. So behavior of the trader and thinking and all these other things are where traders get into trouble. Stick to best playbook ACB templates. They are coils sideways, and the coil represents where all time frames are aligned. Go to our 4-hour chart, just repeating that the 4-hour rotation gives us some insight into whether or not, as we head into our coil, we may now have an extreme of the week in place. Now we have a market that's closed in breakout on a Wednesday at the highest closing price of the month. And looking at the previous week, if again, just understanding time rotation, a market that's gone down, put in a low of the week in place, coiled sideways, pin hammer, just recognizing the behavior of price and time at the levels. Pin hammer, coiling sideways, an explosive continuation trade, closing in breakout, pulling back, and continuing higher into the close of the week. And what that means is that the high of the month may not potentially be in place yet. They're still going higher. They auction down into that lower closing price level, coil sideways, and explode in breakout into Wednesday's close, closing as the highest closing price of the month. Now, we saw previously how markets broke out again right away, but then they broke down. Now, recognizing we've broken out and broken down and engulfed in our London window, we have now a potential reversal already in place, and for London session traders, they may already be in this move, a market that has come up on their watch list, closing in breakout at the high closing price of the month. We have a level that can be used as a max risk on a trade if taken in that London session based on our higher time frame. So if we back this up and we take a look at the previous weeks that closed in breakout, if traders took that trade in Asia or London the previous week, we saw that the market pulled back into closing price level, consolidating. So if traders were short inside of that range, again, we talked about that coil, that larger choppy coil, that is not the sideways coil that we're looking for. So differentiating well-engineered chart. Now in this particular case, this market has broke down. Now what does that look like on our smaller time frame? We have our sideways coil. I'll highlight this and then we'll highlight the previous week. We have a sideways coil on top of the breakout. Now contrasting that with our previous week, we had a sideways coil that broke down in Asia and made a larger box. In this particular case, we have our breakdown, our London session collapse, and the coil sideways for the continuation trade in the US window. We'll go to a smaller time frame, but we're on top of the breakout, the London session collapse, and coil sideways at the high of month level. Now contrasting that again, recognizing what a well-engineered template is. We broke down and now we're inside of a larger box trading back into that low of day level made. In this particular case, we collapse down and coil sideways on top of the high of month for the continuation trade, and recognizing again pins pointing upwards as we head into our US session window, and a new 4-hour rotation beginning at 6 a.m. The pump, pin high, and dump collapse ACB template for the all-in monkey hammer till the close of the day. Now there's an important distinction to recognize the difference between these two charts. We got week 1, week 2, week 3 blowing off in the direction of the trend, coiling sideways. I'll repeat this over and over again. Coiling sideways, not auctioning back and forth, creating a range. Coiling sideways, that is the ACB template setup for the monkey hammer. In this particular case, the London session traders got this trade opportunity. Now let's go back to risk management. If traders were to take that trade in the London window, this is a 1-hour chart. This 1-hour candle is our maximum stop loss as that market's coiling into the collapse. That is a worst case scenario. So training your brain to recognize the higher time frame extremes, and then being able to manage our risk even for the longer time frame, positioning ourselves based off of the close of this candle, placing a stop loss in place, and then walking away. An ACB template. There is nothing to think about. There is no thought process. Do I have a well-engineered template and a coil setup? If so, entry, stop loss, take profit level, or hold till close. That is the thought process. That's it. That's the setup. That's my job. Execute the trade and walk away. Heading into our London window, we have our sideways coil. The market breaks out again, triggering new breakout traders into the market. Now take a moment to stare at this chart and we'll look at the previous 2 Thursdays. This is our previous Thursday. Again, it broke out. As we said, we created a new breakout. Perfect. And we made a low. A peak formation low, coiling sideways. Now I went through this. If traders executed this trade, the same process applies. Managing your risk, entry, stop loss, going to break even, and take profits. One more time for reinforcing muscle memory. We can have our entry. We have our collapse in our London window. We can even put a starter in up top. But the closing price, Paul Tudor Jones, worst case entry, closing price. We have pin hammers on our 5-minute chart above closing price. Thesis is the high of the month is now locked in. They break through the higher low of session level from the US window. A break-even level we can acknowledge. We have a new 4-hour rotation beginning at 6 a.m. which allows us to draw the new low of day level. We have our coil sideways into our US session open with peak formations already made in our new 4-hour rotation, our coil for a beautiful parabolic collapse into the low of week level. Contrasting that again with a market that broke out, went down and put in a low of day level, coiling sideways. Differentiating what a well-engineered ACB template looks like versus a market that is just trading. And our Thursday on the first initial close and breakout that was outside of the monthly range, again a coil sideways in a trending market on the front side of the month. Same process would apply, but not an ACB template. Now this particular trade, if traders traded this long, still were able to get out of that market with some profits or at the close, but not an ACB template, just a trend trade template. It's come down first, put a low of day in place, traded back into that level, coiled sideways to continue on the front side of the month. Remember, this is the ACB masterclass. We're looking for scalable opportunities, zero stress, zero thinking, zero emotion, zero management. Other than going to break even, there is nothing to do on this trade. Once traders in London are positioned in, moving their stop to break even. Once traders in the US session are in, moving their stop to break even and walking away or taking profits at a predetermined level, presetting that and walking away. When we look at our coil, again, we have our close and breakout high close of the month. Coil sideways, the London opportunity, entry, stop loss, break-even level. For US session traders, the new 4-hour rotation begins. We have our 6 a.m. 4-hour candle, the coil sideways into our 8 a.m. open. The pump and coil entry, stop loss, either presetting the target for the low of week level, low of day, low of week level, or hold till close. Breakout, extreme high close of month, coil sideways, not auctioning back and forth and creating a range. It's week 3, we're on the back side of the month. The break-even level, the coil sideways again, and the parabolic collapse. Very important to recognize what an ACB well-engineered template looks like. Not ranging all over the place, not trending, coiling sideways. And if we have a trend trade, the same thesis applies as we demonstrated on the Dow chart. A breakout, a coil sideways into our timing window, all time frames aligned for the explosive range expansion. This is a well-engineered template, very important to differentiate a garbage chart from a well-engineered template that will go till close. We'll see you in the next video, traders.